Hey, good morning once again to all of our options traders out there. Well, if you've been trading options for a while, you know there's a lot of reasons why people can end up with losses. But from all of the years of coaching and teaching, the one culprit that I find to be the biggest source of problems is overconfidence. Too many times traders go on a very short-term winning streak and suddenly think they've got the goose that lays the golden egg, they've got the perfect strategy, and they are just being able to see the future. And they just get overconfident and start placing bigger and bigger bets until their strategy doesn't work anymore. And you have to realize that in the short run, anything can happen. I just saw an ad from some guy on YouTube who said, click here to see my track record over the last 7 weeks. And I'm thinking, seriously, 7 weeks? And how many trades did he place in that time? That is such an incredibly short run, it proves nothing. And yet, this is why so many traders think that they now have the perfect strategy. So, what is the biggest source of overconfidence? Well, let's go find out. And like always, before we do, please be sure to click like and subscribe. It's going a long way into promoting the channel and always greatly appreciated. So, what is this big culprit that's causing the overconfidence? Well, I think it's just randomness. And traders just have little respect for randomness. They just don't understand this whole idea of random transactions and random processes and the patterns you can get, and the number of people that can win from no other reason than just dumb luck. And what they do is they believe that success is due to brilliance and their great strategies, and their losses are due to outside forces, something that's out of their control. And that's what fuels the fire. They just think that they are infallible and it can't be their fault. But when things work out, it's always because they came up with a great strategy. So, how is it possible that you can have a lot of people winning just from dumb luck? Well, let's take a look at an example which I've used before. I like using roulette because it's a little more obscure than just a coin toss, and it's easier to get lost in the math. But the game of roulette has a number of types of bets. Now, these are not all of them, these are just some of the more common ones, and these are the payoffs. So if you bet on a single number, there's 38 spaces on at least a US wheel. If you bet on a single number, the casino pays off 35 to 1. So if you place a $1 bet, they'll pay you $35. You place a $10 bet, they pay you 350 bucks. It's always 35 times the amount that you bet. You can bet on two consecutive numbers, they'll pay off at 17 to 1. You can do what's called a corner bet. For numbers that are touching, they'll pay off 8 to 1. You can bet on 12 in a row called a dozens bet. You can bet on red or black. And the red or black bet pays off 1 to 1, just like a coin toss. So it looks like you might have some pretty good trading strategies in here because look at these favorable payoffs. This is what a lot of traders think. And they wonder, how can a casino possibly make money when they're paying you 35 to 1? And see, a lot of traders will look at that and say, man, that's a good risk reward ratio. Let me do that. They end up winning and they think they've got it all figured out. Well, the problem is that these numbers, even though they look high, are not high enough relative to the probabilities. The casino pays off below fair value. So for example, here are some of the bets on a single number bet. You have a 1 in 38 chance of winning 35 bucks, and therefore you have a 37 out of 38 chance of losing your dollar. For two consecutive numbers, there's 2 out of 38 chances you're going to win, payoff is 17 bucks, and therefore there's 36 out of 38 chances you're going to lose your dollar. Well, we can just multiply these out, add them up, and it doesn't matter which bet you take, you're going to lose about 5.25% of your bet. So if you're betting a dollar, you're losing about 5 cents, 5.25 cents per spin on average. Now there's one exception, and that is called the 5-number bet or the basket bet, and it actually carries an edge about 8 cents against it. But any of these others are all going to have the same edge acting against you. But for this presentation, let's just look at a simple one, the red-black bet. Again, it's going to have about a 5.25 edge acting against you. So let's go to the casino here. Let's take hundreds of people, let them play roulette for 100 spins. And the question is, will anybody win? And most people would say, well, you've got this big edge acting against you, nobody's going to win. But what they're overlooking is that the standard deviation is very wide. That's just a mathematical term. It's a term that just shows how much variation there is from the average. And yes, you are losing about 5% on each spin, but you might double your money or lose it all on any given spin. So there's a lot of variation around this. And that's one of the keys to understanding why some people can end up on the winning side from dumb luck. So let's take a little dive into the math here. Remember, you can either win $1 or lose $1. The edge against you is 0.0526. So statistically, we take on this first line, the amount you can win, subtract off the average. This is your expected value, and we square it. We're just saying how far is this away from the average. And the reason we square it is to get rid of any of the negative numbers that might occur. But now we have to weight this. We know there's 18 out of 38 ways that you can win the dollar, and there's 20 out of 38 ways that you could lose $1. So it turns out that if we multiply these out, we get a standard deviation just a touch over 1. So if this were a perfectly fair game, it would be exactly 1. So we can see there's a little edge right here. So the average for 100 spins, remember that's what we're going to do, is to take 100 spins. The average loss should be about $5.26. But if we want to look at 2 standard deviations wide, which covers about 95% of the area under a bell curve, we have to take the average of minus $5.26 and subtract off 2 standard deviations. And we have to take minus $5.26 and add 2 standard deviations. So with 100 spins, we actually have to take the square root of 100, which is going to make it 10 times this amount. Don't worry too much about the math, but I just want to show it here to show how wide these intervals can get. So what this is telling us is that the average person, remember we're sending a big group of people, each person spinning the wheel 100 times and betting $1. The average person is going to lose a little over $5.25. But 95% of the people are going to be somewhere between a $25 loss and a $14 gain. So if we rescale this to make this 0, then we can find out that our distribution is going to look like this. It turns out that at about 0.52 standard deviations up would be 0. That's our break-even point. And because of that, the amount of area here in red is about 70%. That tells us that 70% of the people will be on the losing side. And that means over here in the green, 30% of the people are going to win. From nothing more than dumb luck, doesn't matter what strategy you pick, you're going to see about 30% of the people win. And it's really just because there is such a large amount of variation, very much like there is in the stock market. And especially when you're dealing with options that are highly levered. Yes, lots of people are going to win from dumb luck. And that's the thing that people don't respect and understand, which is what leads to overconfidence. So the main thing to understand is that for the best traders, the thing that makes the best traders is that they make the right decisions. But also remember, good decisions can have bad outcomes. So always remember that a short-term good track record is probably nothing more than randomness that just happened to move into your favor. Don't get overconfident over short-term winning streaks. And for anyone who'd like to learn more about the art and science of options trading, please check out the Alpha Trader course, Strategy Lab, and a candlesticks and technical analysis course. It's all at optionsatoz.com. Also, please join us on Options A to Z's Facebook trading group, and you can find a link in the description below.